Garrett, what's going on?
Hey Sam, thanks for having me. It's great to be here, dude. Good to see you again.
Yeah, you too. You too. So yeah, Garrett and I know each other from the Best Ever Conference, which he helps put on, which if you guys have not heard of it or have not been, definitely an awesome time, great experience, probably my favorite conference in the real estate investment type world. So they do an awesome job. Yeah, Garrett and I met there a handful of years back actually.
Yeah. Yeah, it's been a pleasure having Sam come speak at the conference a couple of times. And I know you've had a booth there a couple of times as well. And the best ever conference, ultimately, kind of a side hustle for me and for my business partner, Ben, but it's the leading middle market commercial real estate conference. We always like to look at it as there's sort of a lot of conferences out there for if you're doing residential stuff, you're in the fix and flip crowd, there's some conferences for you. If you're Blackstone and you're super institutional, there's a whole different group of events and things for those folks. But if you're in the middle, if you're syndicating, if you have 50 million in assets under management, 300 million in assets under management, where do you turn to? Where do you go to learn and scale your business? And that's the best ever conference. But ultimately, my day job is I'm a commercial real estate developer through and through, and then this conference is a way that I get to spend time with people like Sam. So
Yeah, and you have some recent updates too. I know at the time of recording this, you recently left your full-time role and are kind of doing your own thing now too. So walk us through your background, what you're doing prior, aside from the conference, and kind of why you made to went to make the pivot and kind of what that pivot looks like for you as well.
yeah, I did. So I left my full time kind of corporate role at a commercial real estate firm back in July, and so it's been 5 months now out on my own and running my own company. And ultimately, for me, Sam, it was like I always knew that I wanted to be an entrepreneur and that I wanted to have my own business, and that was one of the important things for me. And even when I took the job at my last company, which was Spartan Investment Group, and Spartan Investment Group, for the folks who haven't heard of it, is one of the fastest growing self storage investment companies in the United States. I joined that as one of the earliest employees and earliest team members, and ultimately became kind of an owner there. And we scaled that up to 150 people, 65 self storage assets, and top 30 self storage owner in the United States. And then I left that company in July and started my own company, doing some development as an asset class as well. And Sam, the reason that I decided to make that jump is one, I wanted to control my own destiny, control my time. Two, I think that there are asymmetrical risk reward returns for business ownership. And what I mean by that is you and the person who owns the business might work similar hours. Maybe they work 70 hours a week and you work 65 hours a week. But they're entitled to all the profits of the business. And that's just a kind of a law of the universe. They're entitled to all the risks that come with that as well. But ultimately, that was a risk and a trade off that I was excited to take. And I think if you want to really build exceptional amount of wealth in this world, you need to do it through business ownership.
Yeah, you made a great point too. I actually just recorded a podcast, a solo episode on this probably a handful of weeks back, and I use a different example of it, right? But like take the tech employee in sales, right? Making call it 150, $200,000 a year. They're looking at making their company 2 to 3 to $4 million plus all the enterprise value that it goes and creates, right? So as an owner, it's really tough to go build like true generational wealth unless you're insanely high income to rather than having ownership,
Yep.
right? Like you either have to make likely $1 million plus a year, or and then invest well, right? Find tax havens, invest well, and do that for a long period of time, or you have to have ownership in something. So I think you make a great point, right? Like you can go put in similar effort, similar risk in terms of how it impacts your life. Not obviously your risk overall, right? Your risk is more finite as an employee than it is as an owner,
Mhm.
but you're never gonna get that scale and compounding if you don't own something, whether it be a business, real estate, right? Build your own company of some kind. Yeah, so yeah, that ownership piece of it in terms of scale that you get is huge.
Yeah, exactly. And I think if if you are someone who is going to be an enterprising individual, the type of person who can do well and earn those types of high incomes, you'll probably do exceptionally well at owning your own business. And so that was something that I just could never get behind. That I was very transparent with the group that I was at too. That hey, someday I do want to own my own company, or I want to be like a full fledged partner here. And seeing my last company go from its infancy to like kind of the heights that it was at was really like just eye opening for me. Where it's like, hey, I did fine, but the partners at the company made tons and tons of money in the
For
5 years
sure.
that I was working there. And I want to go do that for myself. And that's what I told them too when I left. And we left on great terms. And I said, look, I watched you guys do this for the past 5 years. I'm going to spend the next 5 years or the 50 years of my life doing the same thing for myself.
It's also more sustainable in a way too, right? Like building something for yourself because eventually, depending on how you want to grow it too, right? I think there's a few different routes people go. I'm not sure what you want to go do, but you may want to go build something that looks like your previous employer, right? With 100 employees, and that could be a massive, massive, massive company. Or you're like, hey, I want to go build a really cool lifestyle business where I can spend more time with my wife and kids and still have really good upside overall, but find that balance of, hey, I'm working really hard for a handful of years, then almost taking a step back and letting it be a portfolio company, portfolio properties for me in terms of what I want to go do. So
Mhm.
on your end, like how are you thinking about how you're building this today in terms of the longer term outcome of what you want to have happen?
That's such a good question, Sam. And I love and hate the term lifestyle business because I think people think lifestyle businesses are small by definition, and that's not necessarily true. Um, at Spartan, we had a lot of employees, and that was one of the kind of points of divergence for me as I realized, yeah, I don't think that I want 150 mouths to feed. I think that if we could earn the type of profits that we were earning, multi-million dollar per year profits, and split that up amongst fewer people. And ultimately, real
Sure.
estate is a great way of doing that, where you can have a year where we make $7 million a year in profit, and it gets distributed to the partners. And people think that that's a crazy thing, but it happens in businesses all over the country all the time. And then to kind of to your point, a lifestyle business, the lifestyle that I want, at least right now while I'm in my 20s, is I want to be working a lot. I don't see myself taking 200 days off per year. I'm trying to build something here, and that's the type of lifestyle, but I have total freedom to do that thing as well, where it's like, hey, I want to work a lot because I've got a goal in mind. I have things that I'm building towards, but I'm going to do it on my own terms. Like I said before we started, is I just got back from the gym, and I have the freedom to do those things. My son is 3 months old; he's growing. I can spend time with him, and the things that really matter to me are the things that I get to work on.
Yeah, and it's really cool too because right, being in your 20s now, you get a window of time where if you can go grind for a handful of years, that will keep paying you exponentially in terms of equity, in terms of cash flow, in terms of future deals, right, going forward. Where if you're an employee, if you have some level of equity, it's usually a pretty negligible amount relative to the owners of that company. Where if you put in all those years, you actually make more in cash in the short term, but your longer term future value of earnings goes down dramatically. So this is a period of time where you can go grind for a handful of years, build something, eventually hire yourself out, or reduce your capacity in certain ways and still go earn going forward, which I think is a path that a lot of people want, right? Like you want to have that sprint for a handful of years to build something sustainable, then have the optionality of, hey, maybe I want to do something else. Maybe I want my role to be diminished here and focus elsewhere. Or I want to have the option if I want to work 20 hours one week, great, or 50 hours one week, great. I think
Mhm.
that's the big pivot that people are looking at is how can I go get myself to a place of optionality, right? We're not forced to go be there through systems, people, hiring, and understanding what you want your business to go look like and your life to look like ahead of time helps you march towards that goal in a much clearer way.
That's totally right. I have this kind of school of thought, which is that all things compound, and everything is compounding in your life, to include your business, to include your relationships, your networks, all those things. And so if you start a business now, yeah, it's going to be really small, but it can start its compounding period. And over the next, decade, 2 decades that you're building that can continue to compound. Even this podcast for you, Sam, where hey, you put this thing out into the world and it's reaching this many people this year, but next year it's reaching that plus its growth rate. And it continues to do that as time goes on. And I think I said to one of my friends, I said, um, if I can get to a point where I have 5 employees that are working for me and those people are working 40 hours a week for you. Could you imagine that if you extrapolate that and you compound it even just a little bit, time and time and time again? And maybe that's
For
the
sure.
wrong way to look at human capital or something, but the facts don't lie. And so starting early, and even if you're starting somewhat small, starting early is incredibly important, I think, in order to get where you want to go if you have long term views.
Yeah, it's funny you mentioned the podcast. Like that's something even on my personal end too. I modeled like, hey, the first 2 years of the podcast, I'm modeling this as a pure investment, right? Zero return. Episode 2 episodes a week. I think we're at now. We'll eventually wrap it up as well. And it's something you're like, hey, this is a very long term view on what you're doing because in the short term, your return on time is horrendous, right?
Mhm.
Like you're building episodes, working to build an audience, you're spending money on it, getting zero return. but it's something longer term, is very, very valuable to go do. And it's interesting to kind of think of that when you look at it. Another key point you made too when looking at the hiring side of it, like the best investments you can go make, hands down, relate to bringing on the right talent. Like in any deal, take real estate, for example. I'm sure your previous company probably model deals, what, a 14 to 16, give or take, IRR, depending on the risk profile, et cetera, of the deal.
Yep.
Um, Meaning that over a call it a 5-ish year period, give or take, right? If they hit their numbers exactly, the investor should make 2x on their investment. But if you nail it with the right hire, you can make more than 2x in the first year with that same hire in terms of their costs versus their profit to your business. And like you said, you can go compound that with multiple hires, layers of people, right? Giving them time to compound and grow. Those numbers can go up dramatically if done right.
Completely. Yeah, and once you're in the driver's seat, I think all those factors, they can be working for you. They can work against you too. We've all seen that happen in companies, but I think if you do things
For
right,
sure.
you're conscious about them, they can all be working in your favor, which is a very powerful thing to have.
Yeah, and when you think about, so to pivot a little bit as well, when you think about the size of the company and the volume and quality of deals that you have to go do, right? If you look at your previous company, how much in deals they had to buy a year to make sure everyone across the company was fed?
I couldn't tell you the dollar amount, but our burn was multi-million dollars a year, well into the 10 figures, and our our burn was well above $10 million a year. Because it's a very sizable organization, which can be difficult to sustain. And as I've looked at what I want to build for myself in the future, and as we go forward, it's this type of thing where I think that there are a lot of hats that you can wear, and there's operator hats, there are investor hats, and depending on which one you want to have on, if you would want to be an operator who's operating assets day to day, you're in the weeds of a business, you're making decisions, you're being very tactical in business. Or if you want to be an investor, think of like a Warren Buffett type of character. He's sitting around, he's reading, he makes a couple decisions a year, things like that, and building a business that reflects that whichever avatar you most align with. Neither is good or bad, but those two lifestyles can be
Sure.
incredibly different. So you should make sure that you're intentional as you gear and build towards either of those.
Yeah, it's crazy. Like if you think about a burn of $10 million a year, the amount of deals you have to go do, you're probably at least a quarter billion, if not a $500 million of deals every single year that you have to go do in order just to go cover your staff. And what happens there is that if you have to go do volume, both in terms of size and number of deals, the likelihood of buying less quality deals because you have to go feed people is far higher, right? Your margin per deal can potentially go down because you have to just get more scale to cover all those salaries that you have. Not saying they're buying bad deals in any way, but you're forced to buy more overall. Right? Obviously, more systems, more people, more dollars after deals. But if you're a one or two, 3-man shop, right, and you only need to go buy a few deals a year, you can likely find better quality product because you don't have to deploy as much capital. You don't have to go take in as much in fees, right? So you can go structure your business in a way that you can do less, but actually have far higher margins overall if done the right way.
That's exactly right. I think there are a lot of folks just in real estate, in private equity, and private credit across the board who think that size is the answer. And then they go to a point where when we were really small, I was making $1 million a year. Then we scaled like crazy, and I stopped making $1 million a year. And now we have all these things. We're doing way more deals than we ever were, but I'm making less money now. And that's like, well, what were you solving for? Were you solving for size, or were you solving for how much money am I making per year? And some folks are solving
Sure.
for the wrong thing.
Yeah, I think it really matters with what you want your life to look like. And it's interesting because if you hit that place of scale, like I did a podcast recently on this with Rob Beardsley in terms of like the growth they've had, right? And there becomes that equilibrium point, right? Where if you can go and kind of stay small, right, in terms of headcount, in terms of burn, you can be really profitable. But if you want to grow, you'll take a few steps back before you take steps forward, assuming you actually hit those metrics in terms of deliverability.
Yep.
So it's just an interesting thing. Like one's not right, one's not wrong. I think it matters a lot on what your capacity is, what your desire is, what you want your life to look like. So if you're listening to this and thinking about creating your own shop or joining a team, right, make sure that that end goal in terms of size, scale, profitability, teams, right, understanding yourself as a person and what you want, make sure that all aligns. Otherwise, you'll end up in a situation where you're making less and you're potentially working a lot more doing things you don't enjoy.
That's completely right. And I think people understanding what they want as individuals is one of the most underrated facts of life. Ultimately, you start thinking, oh, I got this high powered tech sales job, or I have this big real estate development job. I'm director of development. I'm making more money than I thought I could ever make. Why am I not happy? And they realize, oh, that's because that wasn't what I wanted. And sitting down, having a hard conversation with yourself and saying, that's, you can't go for what I want to want. Like, oh, I want to want this high powered tech sales job where I'm making $1 million a year. No, that's maybe what you want to want. What do you really want? Like, do you want to spend more time not working, or spend more time surfing, or whatever it is, and be honest
Sure.
with yourself about those things?
So a question I have too is, what was that conversation like with your wife when I assume from the numbers you told me, right? Your son's 3 months old. You left your job 5 months ago. Your wife was what, 6, 7 months pregnant for your
Yeah.
first kid, and you're saying, "Hey, we're leaving this job I've been at for 5 years. I've done well doing it, but I want to go do my own thing." Like, what was that conversation like? Because I think a lot of people have either in their head or actual resistance when they go from, "Hey, I've got a great job, making good money, right? Family's in a good spot," to, "I'm going to go do my own thing entirely and take on risk or perceived risk to others in doing so."
Yeah, I'm glad you asked, Sam. And ultimately, I think there's never a good time to leave your job and start a new business. And whenever you start thinking about that, you'll probably start doing even better in your job, which makes the time even worse to leave your job and start a new business. And I know folks like people that we talked about at the beginning of this podcast who are earning multi-million dollars a year and have $8 million in just liquidity saved up, and they're still afraid to leave their job. And that's an amazing thing. Like, it's crazy how those handcuffs start to happen as you get further and further along. And I had those conversations, and we'd been priming the pumps a little bit and saying, hey, I think once I get this amount saved up, maybe I look at starting my own shop. Okay, what about maybe, how about this time? And ultimately, it was important for us that we didn't have to change our lifestyle or anything like that.
Sure.
We could maintain the same quality of life. We had a baby on the way, that we could afford the additional expenses that come with having a baby on the way, that my wife wouldn't have to work through that time period or anything. And so the most important things were, hey, do we have enough money saved up to do this? And then when will be the next time that we earn some income, essentially? And I had a personal development deal. So I was the director of development. I was doing about $100 million worth of self-storage development there. And I had a $2 million self-storage development that I was doing personally. And one, that made some folks at my company upset, understandably so. But they didn't love that I was doing that project. And I was like, well, I'm going to earn some money from this project. I have some money saved up. It was not by any means like an incredible amount of cash, like, oh, we'll never have to work again or anything like that. I had,
Sure.
honestly, I'll be candid with you, Sam, I had about 12 months worth of cash runway saved up. And then I knew I was going to earn another $100,000 from this $2.5 million development deal. And I said, there's no way that if I work at this 80 hours a week, that I can't make something else happen within the next 12 months. And she believed
For
in me.
sure.
She took the leap of faith with me, and she said, yeah, I think that you can do it too. So, when the time's right, go ahead and pull the trigger. And I did that in July.
That's awesome. Yeah, I think you're thinking about it the right way too. And I think it's something before that, what you did well too was you didn't create a lifestyle where that 12 months is really, really expensive, right? There are some conversations I have with people that are like, "Hey, I make $500,000 a year and I spend $500,000 a year." So for that person to say, "Hey, I'm going to go and leave my job and I need runway to go do so," when your lifestyle is that expensive, that jump becomes that much harder to go do. So you positioning yourself of, "Hey, I've got this window, I've got this side project to buy us some time," and my hunch is that if I put all the time I was spending in my current day job and focus on just doing this, right, I can likely get something done in that period of time too.
Yeah. Yeah, exactly. And I think an important thing in investing, right, is you don't want to put yourself in a crunch where you have to do a deal because you need income or anything. So between what I had saved up and what I had um, coming from this development deal, that was about 2 years worth of runway. And then I also got a buyout from my previous company because I was a co-founder of our construction entity, and then had bought into Spartan Investment Group as well. So I had a buyout from those two things come in, which helped things as well. And wasn't sure if that was going to come through or not, but it did come through, which was a good thing. Ultimately, I was prepared to make the leap with or without.
Sure.
that kind of windfall of cash coming. But one of the important things that I want to share with the audience, Sam, is like you hear these people and you hear people like Sam, and they've been like crushing it since the day they were born. They've just been like making six figures since straight out of college and all these things. And I actually had like a more normal income trajectory, I would say, where it's like, when I was making $65,000 back when I was 23. I wasn't making $250,000 as a 23-year-old or anything like that. And that income ramped up over time. And in the last couple of years at my job, it was more substantial. But at the end of the day, you don't have to be someone who you hear these podcasts and they're like, oh, I could never be that guy who quits his job and starts his own shop because I wasn't the type of person who was making like multi six figures for the last 10 years or something like that. And you don't need to be that type of person. It's like, get yourself in a good financial position. Don't have a crazy high burn. I had a pretty good burn, a nice 2-bedroom apartment in Cherry Creek, which is the best neighborhood in Denver. And, spending good amount of money every month and doing nice things. But ultimately it's like, I wasn't driving a Lamborghini or anything like that. And I think be conscientious with your spend, be tactful with your savings, get something else lined up, particularly if what you are if what you want to do is leave your job and do something that's in any way tangential to what you're doing currently, then start working on something that's in that field. If you are doing something that I was in commercial real estate development and I was doing a commercial real estate development deal because that's what I'm really good at. And that's a great position to be in as you look to kind of make that change.
So yeah, you nailed it, right? Like you don't need to go have a big income to go leave your job. Nothing doesn't hurt, right? The
Yeah.
more you can go stash away, the more runway you have, right? If you look at runway of saying, hey, I make X a month passively, my burn is Y a month, net it's Y minus X. And then you look at, okay, I have X in savings, you're like, okay, how many months can that last me? Right? That's basically your personal runway to I need to get a job or figure something out, right, in that window of time. And the longer you have in that runway, the more likely you are of succeeding, right? If your period of time, especially in something like real estate, is super short, you may run out of time before you get something done. When you get something done, though, they can be very, very big windfalls, right? Whether you're buying real estate, buying a company, you need a level of runway to go give yourself a shot at making it work. Like I think one of the biggest things in entrepreneurship is having enough time. Like you just hang around long enough, usually you figure something out.
Yeah. There's a whole like network of people who I think in this world of entrepreneurship and kind of solopreneurship, if you will, who are like piecing things together. And that's a terrible business strategy, probably, is to leave your job and say, I'm just going to piece things together and like some things will fall my way. But I've been amazed at the opportunities that have fallen my way since saying, hey, I left my job. I'm working on this and this and this, but and you have a lot more time to have those conversations with people too, and say, hey,
For
Sam, let's
sure.
catch up. What are we working on? And how can we work together on something or whatever it may be? And I think a lot of that's just doing your due diligence before you leave and after you leave, making sure that you are getting yourself out there, having candid conversations with lots of folks, showing people what you're good at, what your potential is, and being candid about, hey, this is my aim as I go forward.
And something you did as well too that I think is crucial, right? I think a lot of people at times think of, hey, I'm leaving. I have this great day job. I'm gonna go leave and build something from scratch. And I think something that you did really well was that you started building something already with your deal, right before you left, and that makes that transition easier, right? If that deal then buys you 1 year in terms of runway to go live, get something else done. But I think more importantly, it shows that hey, I can do this my own now or use that confidence to do it. And I think going out in the entrepreneurship world, confidence is a major, major thing that people don't talk about enough, right? Like, well, the first deal, confidence to move forward, it just helps you understand that you can go do it. Because I think a lot of times, like myself included, you face massive imposter syndrome when trying to do certain things you're doing, right? You go from watching someone online or speaking who's done these things that you want to go do, and like, okay, how big is that gap actually? And by doing that first thing, it allows you to feel as though that gap is much more tangible to go accomplish what you want to go accomplish. And I think at times people want to go leave their day job way too soon. Like building something on the side, if you're working, 30, 40, 50 hours a week, you likely have time to go build something else on the side. And then alternatively, that transition process becomes way easier to go leave versus saying, I'm going to go burn every bridge I have and go jump in full time, giving yourself a really tight runway to go nail something.
Yeah. The confidence game is a really important factor to entrepreneurship, like you said. And when I was looking at, hey, I'm doing these 10, 15, $20 million deals at my day job. Why would I waste my time, quote unquote, with this $2.5 million deal in the Midwest? And ultimately, the amount of things that I learned, even on this little kind of $2.5 million deal, when I'm spending my own
Sure.
money on this project and say, hey, okay, the survey is $10,000. Do I want to spend that $10,000 today of my own capital? Made me think more like an investor, really helped kind of hone my chops on some things as an entrepreneur, and then gave me the confidence to leave my job and go forward with kind of doing the next thing. And now the deals that I have in the pipeline are, $28 million across two deals. And that's the type of deal that I was more used to doing, but I wouldn't have had the confidence to do them had I not pursued this little $2.5 million deal that most people would say is a waste of their time, right? Okay, I'm
For
earning
sure.
multiple six figures at my day job. Why would I go do this? Even if the fee on it is $100,000, like that's a waste of my time. It's getting me in trouble at work. I'll just stop. All these things, and it's like, don't do that. Get started and work hard on something on the side and kind of exercise those chops. It's a very important uh, kind of facet that I think is underexplored.
Yeah, and it's something too that it's a whole different exercise writing a check into something of your own money, right? Like if you're a single person doing a deal yourself, or you run a shop by yourself, or doing deals on your own, even though that is a quote unquote business account, that's your personal account.
Yeah.
Like as much as you want to separate it in terms of legal entities and structure, sure. When it comes down to it, like that is your living expenses to go live off of for a period of time,
Hmm.
right? And it's much different than signing a check to your controller or your CFO that comes out of a $10 million company pot, right? So like just getting used to doing that in terms of putting things in your own credit card, signing your own checks, like it's a whole different dynamic you have to go explore. But also too, like on that $2.5 million deal, you'll probably make a multiple of what you would make doing a $2.5 million deal for someone else, right? So that's a big thing too, is that you can even do smaller projects on your own versus doing a bigger project for someone else and still make way more overall in doing so.
Yeah, that's exactly right. If things go well on this deal, then my promote on that project should be north of $300,000, and my carried interest on my other deals weren't anywhere near that previously. And so, yeah, these things make a difference. And like we've said before, you get multiple of those going. You get five or six of them going at a time, and those things start to stack up. They start to compound, and I actually have another acquisition that I'm working on down the street from this development that wouldn't have fallen my way had I not been doing the development deal. So it's funny how these things
Yeah.
work.
No, it's really cool to go see. And kind of last question before we wrap up here too. So for people looking at getting into the real estate role in some way, right? Say they are an executive in tech, or they're in the sales world, or they're just a corporate employee in general. You know, walk us through the pros and cons of going to work for a bigger shop in a job capacity versus keeping your day job, kind of grinding away there where you can likely make more money and then just go kind of pivot and do your own thing, right? Kind of going from looking at being in the industry to do your own thing, or kind of stay in your own industry, having potentially more cash to play with, then looking at doing your own thing. How do you think about the differences in those two?
Yeah, that's a great question, Sam. And there are massive pros and cons uh, to both of those situations. And ultimately, I'll never knock the big shops because those guys, they're so smart. They have such cheap capital. They have incredible deal flow that's proprietary. And I think, if you have the opportunity to go work at Heinz, then by all, for the rare few who could transition from a different field into working for a Heinz or a Trammell Crow or an HSR or something along those lines. That said, if you are someone who is in a field that you're doing well at, that you are highly competent at, I think it's important to look at, why do I want to make this pivot? And then if you want to make that pivot, is real estate the right thing for you? Okay, good to know. And if it is, then maybe investing passively in a couple of deals to learn some of the terms, spending time with someone who is a GP or who is an operator and saying, hey, I'm trying to learn this business and I would like to learn how you talk about deals, how you underwrite deals, how you look at these things. And that is going to be a long learning curve. Either way, if you are transitioning industries and looking to get into commercial real estate, I think that the learning curve is going to be fairly steep. And that's the case with anything. Don't look at anything as if the learning curve is going to be short and easy. One of the risks of commercial real estate is that things can take a long time. deals on average take 90 days at the quickest to close, but a lot of times can stretch, especially development deals, multiple years in order to get there and become realized. And so I think if you're someone that is currently employed in one field but is looking to learn about commercial real estate, immerse yourself in it. If you can get a job in it, then by all means. But if you also can help out a smaller operator, because there are a myriad, there's so many small shops that are 1 to 10 people. They all have different sets of problems, all the problems that every other business has: issues with their tech stack, issues with employees, hard time finding and recruiting A players, hard time finding and recruiting people who want to be in commercial real estate and give a shit about it. I was always surprised at the amount of people who maybe they're in marketing, but they don't actually care about commercial real estate. They care more about marketing. And there's probably someone who's in marketing but loves commercial real estate too. And that might be the perfect fit for you while you cut your teeth, learn the industry, and get ready to go out on your own, start doing your own deals.
I love it. Well, hey, before we hop off here and wrap up, what's the best way for listeners to get a hold of you and kind of learn more about your new company?
Yeah, my new company is called Playground. You can find it at playground.properties. My email is garrett@playground.properties. And my name is spelled Gerrit. It's kind of a different spelling. You can also call me. My cell phone number is 641-295-2146. Shoot me a text. Would love to chat, and hope to see you around.
Cool. We'll link all that in the show notes. Garrett, thanks for coming on.
Cool. Thanks, Sam. Appreciate it, man.